Hey traders, Philip Tigerson here from Stock Market Strategy. Before I start, I just want to say that trading involves risk and hard work, so please do your own due diligence before trading for real money. Today I'm going to talk about Commodity Channel Index, also known as CCI. I will explain the theory behind CCI and then show some charts about how CCI works. Finally, I will give you some tips about how to best use CCI in conjunction with other indicators and/or chart analysis. If you go to our website www.stock-market-strategy.com, you'll find a tab called Education, Technical Analysis, and Commodity Channel Index (CCI). Here you'll find a written summary including 2 charts showing you how to trade using the CCI. The Commodity Channel Index (CCI) was created by Donald Lambert, or was originally used to identify cycles in commodities, but it works as well in the stock market or the forex market for that matter. The reason for creating this indicator was that Lambert, as well as many other traders, believe that every commodity or stock move in cycles, where the high and low is established within a fixed period. Lambert recommend using 1/3 of a cycle time, which is from the high to the low or low to the high, as the average setting. So if the cycle is 30 days, then you would use a 10-day for the calculation of the CCI. I've chosen a 10-day here as well. The calculation of the CCI is quite complicated, but you can always find the calculation on our website. I will briefly explain to you what the CCI is made up of, so you know what it tells you. It uses a typical price over the last 10 bars, that's the setting here. It then uses a 10 simple moving average of that typical price. Then it uses mean deviation, and after that Lambert adds a constant which is 0.015 to get his CCI. The reason why he used this constant is so he can have his CCI reading 70 to 80% of the time between 100 and minus 100. What the CCI tells you is that when it's above the 100 or below the 100, it's away from typical price. So when it's above, it tells us that it is out of normal price action. When it's below, it's also out of normal price action. I will show you how to use these 100 and minus 100 levels for later. Lambert focused on movement above 100 and below minus 100. He considered move above the plus 100 to tell them that the commodity or the stock is in a strong uptrend, and a move below minus 100 that the commodity or stock is in a strong downtrend. Okay, now you know what Lambert wanted to use the CCI for. You also know what the CCI tells you. So I'll show you how to trade using this indicator. But first, like with any other oscillators, I like to use filters in order to improve the odds of my trades. So at first, I add my MA. It's upsloping, so the trend is up. I will only take long plays. Second, I look for an extreme reading the CCI in the opposite direction of the trend. This is to ensure that there's been enough correction or consolidation in the stock in order for me to get a new up move. And third, I look for the break of 100 to the upside, just like Lambert said. That's my entry. It happens here, and we get our entry up on the price action here. Since the introduction of CCI, traders have discovered various new ways to use the indicator. Many traders use the plus 100 as overbought and minus 100 as oversold. I've color-coded my CCI to give me the feel of this oversold and overbought scenarios. Now I'll show you how to trade this new theory. I first identify sideways price action. I do that by looking at my MA and see that it's relatively flat. Also, price oscillating around the MA. Second, I look for overbought CCI with divergence. That means price makes a higher high compared to this high, but the CCI makes a lower high compared to this high. And third, I look for the cross down through 100, so we're moving away from non-typical price. It happens here, and it means that this bar which closes here is your entry. Here's another way of using the CCI. I've removed the color coding on the CCI in order not to get confused about the overbought and over signals, because this is a trendline break trade. So first, identify the trend. I see that my MA is downsloping, so the trend is down. I'll only take trendline breaks to the downside. Second, I draw in a trend line connecting my lows on the CCI. It gives me my entry here on a close basis. If you see the trendline break on the CCI gets you in before the trendline break on price. Because you get in faster, but still with confirmation because of the CCI trendline break, you're getting a better risk to reward because your stop is smaller and your target is bigger. This ends today's video. I hope you enjoyed it. Please remember to subscribe to the channel so you don't miss out on future videos.